Hi, this is Randy Finney with Right Side of the Chart. This is an early session update for Friday, September 16th, 2022. It's 10:34 a.m. Eastern Time. As I'm starting the video, so we're about an hour into the trading day. I've fired off enough screenshots, charts for you this morning. As I say, if I'm seeing a lot in the morning before the market opens, that's when I'm going to get those charts out to you. If there's no change from the previous day, the previous updates I've done, then there's really no reason. So obviously this morning I fired a lot off to you, and you can pretty much tell from that post. Covered, shorts. I'm looking for a bounce here, and I'm going to talk about that, and also just talk about, whatever was in the video last night. Remember, every morning, as a trader, I sit down before the market opens, drink my coffee, look at the charts, and I try to clear my mental cache from the previous day, clear out any biases. Again, I'm talking short-term stuff. Nothing's changed on the long-term charts, but that's I find that healthy and refreshing to kind of come in each day, and this is what I saw this morning is what I got out to you. We had that bear, the measured target on the bear flag on QQQ. We still have those 5-minute. We have divergences all the way from the 5-minute chart out to the 60-minute chart. So, and we're very oversold near term. So, this chart I got out in one of the replies on, was it the IWM RT? What? No, maybe the QQQ trade. When QQQ hit that measured target from the bear flag I posted on Tuesday, and somebody asked, hey, okay, where'd I, he said he covered his shorts and where to get back in, and so well, here, I'll show you that chart. Well, I'll just draw it out here. I got this before it broke out. I said, look, here's what I had drawn up. Come up here, get a little resistance at about 11,934. That'll probably be the initial reaction there, and I think we could easily work our way up here to that 1279-ish level right there. Although, I should add there's actually some decent resistance. I'm going to do that right now, right there. So here's my thoughts as of today. I still expect more downside leading up to and even probably after the FOMC meeting. Me, I always like to speculate and comment on what the Fed's going to do before they do it. One thing I think you're going to hear, I've been reading more and more about the bond market, even though, of course, I'll give you longs today. But, just some things in there that are really concerning right now. Again, maybe I'll get some of the articles I've read and post them below. But I think the Fed will, they're going to give us the 3/4 point baked in the cake, and I think there's going to be some verbiage where they indicate or outright state maybe they're going to ease off on the quantitative tightening, and they'll talk the tough talk on rates. We're ready to stand by and do whatever else is necessary, blah, 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 blah. So there's a potential for a relief rally there as well. I have mixed feelings. Like I said, we're getting close to that point. Or if we continue lower, selling begets more selling, because you hit the lower the indexes drop, the more margin calls are triggered, and that leads to forced selling, and then that forced selling leads to lower prices, et cetera, et cetera, et cetera. That's where you get those swoons down, and that could still be what's going to happen to take us to my fourth target. But, again, for the reasons I stated this morning in those charts and in this one here, I think we can get a bounce today, but I don't plan to go home long over the weekend. I'll let you know. So like I always say, it's there's a saying. What is it? It's a woman's prerogative to change her mind, or some saying like that. Well, to me, it's a trader's prerogative, and it's absolutely necessary to change your mind, adjust, adapt. I always say the charts are dynamic, and so is my analysis. What I'm seeing right now, I might see something at the end of the day, but as of now, my plan is to game the bounce. And again, as an active trader, I speak to both active traders, day trading, swing trading, and then also trend traders, and less active swing traders that like to hold things for a few weeks to a few months. There's all kind of there's no hard definition for a swing trader. It's just something typically, holding things from a few days to a few weeks, and sometimes a few months. All right, so there's a little bit of a downtrend there as well, but so far we popped that wedge. Like I said, this is what I think we get today. And who knows? Maybe this is the end of the run, but at some point, I think there'll be another leg down of selling, and so I'd be very happy. And one way to do that too, if I'm unsure, maybe the sellers will step in here if I'm even right at all, and we get anything more. We're still negative. We're still down 1% right now in the futures, so it's not like I am profitable on these reversing so far, but I'm keeping a close eye on the, keeping one finger on the trigger and ready to pull that if I need to, meaning get out of longs. I don't know if I'll probably not go back short today. We'll see. I'm sorry, intraday. But by the end of the day, I think I will probably take some shorts home for the weekend, whether we get the bounce I'm looking for or not. All right, and so what you can do is if if you're trying to game a bounce, and you're not sure if we're going to reverse here and stop or go, I'm sorry, or this one here, I would say at least at 11.993 level right there, and quite possibly or likely this. That could also carry into maybe a gap up on Monday that then gets faded. We'll see what happens today. Again, there's a lot that's going to happen between now and the close. We're only an hour into the trading day, but so what happens? You can get, if we're running up and you're profitable on the trades, and we're heading up to 11.993, and you think we might hit up to 12.079 or a little. I'd be selling before the actual resistance level. I always do that, a little shy of that. All eyes are going to be, if we get up there, you can almost guarantee you there's going to be some sellers stepping in there. But what you can do is just raise stops as the trade pans out to protect profits, or at least assure a break even depending on where you're at, and then let it run. Some people stack in pretty heavy. I went in pretty hard this morning, and then maybe pull out some partial profits along the way as these targets are hit. There's many ways to skin a cat, they say, and there's many ways to trade. There's almost an infinite number of strategies and trading styles. But all right, so that's it. Looking good right now on little 5-minute wedge breakouts. That's NQ. Go to monthly chart here. There was some support here around 11.787. I took the advice. It was a subscriber member, RadPro7, thank you, pointed out what Interactive Brokers actually got back to me on that ticket. Yeah, you have to, on those very short-term charts, you need to not use the continuous contract. Just the continuous right now is the December, and if you're a futures trader, you know what I'm talking about. But you don't select the continuous on the charting. They've got the problem when you go down to those 5-10 minute charts of the candlestick thing, and so that's what they confirmed what RadPro7 said. So anywho, that's I replicated this chart. I like the continuous because when you go to the non-continuous, you get the candles are thinner back there, especially when you go back farther in time. But anywho, that's a new. So I redid this chart. There's a little wedge on the 60-minute you can see right there. Now that has, that's a pretty powerful bullish falling wedge, and that's strong divergence. Like I said yesterday, it's anybody's game. I had mixed. Well, it's not mixed feelings. I'm just, this thing's going to break either way. And what would happen here, what would cause this would be something out of the Fed that makes the markets think that maybe they're going to back off a little bit, start tapping the brakes on their bullish rhetoric. And again, remember, that's what I said. The Fed, they're jawboning the markets right now. They really haven't done much. Interest rates, as much as they've hiked them, remember, they're coming off zero. They're still way below the rate of inflation. They're well below where they should be to really have a neutral target rate. But the problem is they just can't raise too fast. They've created a ginormous bubble in the everything, in the financial markets, especially treasury markets. That's a big problem right now. They say nobody's buying treasuries but the Fed, or I'm sorry, the Fed's selling, the Fed's reducing their holdings, and the institutions have left the building. There's, like I said, there's hardly any upside. Now we're starting to get there, and so, there'll be tradable rallies along the way. But anyway, this is a bullish falling wedge here, and there's positive divergence. And like I said, in a bear market, these often just get taken out. And I'm still leaning that way, but oh man, if this thing happens, especially if there's some fundamental catalyst and we have to break out and run, this thing could take us up higher. Now where to? Just from this chart, here's the easy levels. If you're trying to game an intraday bounce too, or a short-term bounce, 1190. I have it at 11,990.50 right there. That's nice. That's that bottom. Remember, we had the lows right there. We took out the low, which I said we needed to do. But at this point, like I said, with a lot of short interest, if the market can hold above this morning's lows and build on these gains a little bit, that would be your first target. So if you're just looking for a shallow bounce target, that might be it. And whether you want to just sell your longs or go into shorts, add back shorts. The other level right here is a back test of these trend lines. That's certainly a possibility. And with these divergences and everything else, if we start to run up to 11,990, then that's going to has the potential to confirm that divergence, and we may do that. So that would be from today's lows. We're not talking a big rally either. It's about 3%, but as an active trader, I'm welcome to game a 3% bounce, because if that happens, and not only do I not lose 3% on my swing short positions, so I avoid that loss, and I turn around and turn it into a 3% gain. So net it's really putting me ahead 6% if you look at it that way. But we'll see. All right, I'm just showing you levels to watch, and then again, if we somehow the market stabilizes between now and the Fed meeting, we could work our way up there. Next resistance pretty big is about 12,263. Let me look at ES and then RTY, and then we'll wrap this up. I'd like to show you gold as well and silver. I'm still liking those. This is the ES 60-minute chart, S&P 500 future. Same thing. You've got this pretty steep bullish falling wedge pattern right there. There's the recent lows that we took out. So if they want to back test that, that's at about 3,900 right there. And then I would definitely give you another level right here. If they can get above those lows, you've got some resistance coming in. Roughly, this is just a rough about 39.36. And then that would probably be, in my opinion, the max bounce target up there if we can really get some traction on any rally here. A lot to do. Look, we're still down 1% also on the S&P 500 futures. So, I don't want to make it seem like a bounce is baked in the cake. But like I said, I think the odds are pretty good right now. I think there's a lot of shorts that need to get squeezed out before the next leg down. All right, so those are your index futures, and then RTY, of course, I gave you that this morning. Sometimes I forget to reiterate, but you always want to wait for a solid 60-minute close. And on IWM, remember, the problem with the first candle of the day, it's only a 30-minute candle, because there's 6.5 hours in a trading day. So what happens is markets open at 9:30. The first 60-minute on a 60-minute chart, they finalize that first candle at 10. Then on every hour after that. So either way, you can see even on the futures, it looked like we snapped back. I got to zoom in for you, but there's that trend line I talked about, and so far a little false breakdown. So that was a bear trap. We're right on it. You can call this a back test if you want. So it's anybody's game right now, but I think like I said, I think they'll pull that up. And then those that shorted that breakdown on IWM, if they jump the gun, they're going to get squeezed out. We could see a little upside there. That's RTY, of course, stock futures. And then IWM is the ETF for the Russell 2000. And there's a whole bunch. I can't go over each and every variation of the leverage ETFs, but this is a daily chart of IWM. And you can see the same. There's the uptrend line. So it's a primary uptrend line off the lows on IWM. So that was hit right here. Just like the S&P 500 hit there, we bounced. That's comparable uptrend line I'm talking about. And so we're there, and there's also price support because we're right at, if you look at it here, let me drag this line down, we're right at the previous lows there. So again, this is a level, and right or wrong about the bounce, we've already had a reaction. I wouldn't really call it a tradable bounce yet. We need to go up a little more. IWM still red for the day, but off the lows. But that, to me, was a very objective long entry for a bounce trade, because the traders, the algos, everybody, they're going to look at those previous reaction lows, and hey, they may get taken out, and that's what happens in a bear market. Good support levels that in a bull market would normally produce a much bigger bounce, they kind of turn into speed bumps, meaning you drop and maybe a little consolidation, then that level goes and gets taken out. So that's why I'm not getting married to this bounce, but as of now, I'll try to game it, and that's what it looks like on the 60-minute chart. There's that support. Really, the previous lows. I said 178 in my. I was just rounding off. Remember, you're talking almost 200 point security, so every point is a 0.5% on a 200 point security. This one's 170, so that's close enough right there, and that's it. And that's that previous low. So now on the flip side, we're back testing the trend line from below. So work to be done. This is a bear market we're in, so then maybe they sell that back test and then take out the lows, and we head on down to the next support level. But like I said, you start to go down more, and you're going to get that vicious cycle of forced selling. You have longs that stop out that can't take the pain, and then you have shorts that'll also pile in, and then you have that subset of traders at the end of every great big bull market, like we ended earlier this year, you have a huge amount of margin interest. I mean, a lot of folks that just kept buying more and more on margin because things were going up, and that's why bear markets are so powerful. That bubble gets unwound, and that's where valuations go down to dirt cheap levels, and people just can't understand, especially these analysts. They use fundamental analysis. They just can't wrap their head around why Apple keeps falling, and why Microsoft, all these great blue chip companies out there as well, why they just keep falling. And that's it. It's not at that point in the bear market, they're not dropping on fundamentals. They're dropping on like I said, forced selling, fear, everything else. All right, so anyways, let me move on to gold and silver so I don't have to do another video. In the euro, remember, it's all about the euro. So like I said, we'll see what the Fed does and says, but remember, and it's also not just that. The US dollar trades, the value of the US dollar, it's relative, and it's relative to what makes it up, why we know where it trades at. It's relative against a basket of other currencies, and of those, the euro by far is the biggest, and then the yen is the second largest at a distant second. Everything else added up hardly even moves the needle. So this is a euro. Remember, we had that 60-minute wedge breakout, which was bullish and successful backtest, rallied up, hit my first and then second target, had a reaction off there, and then recently we put in this another 60-minute divergent low, and right here I'm going to put a line. If we can pop these highs, which I think we probably will. So remember, the Fed, we're not going to know what the Fed's going to do. They usually go in a little blackout period right before the meeting, so you're probably not going to hear anything from them until Wednesday 2 p.m. But whatever the ECB does, if they start indicating they're going to do anything that's going to boost the euro, such as rising rates or doing anything else, then that could cause the euro to go up. And then if it does, like I said, gold, nothing much has changed on gold. This is GC 60-minute chart. Oh, it's my 10-minute chart. Right there. You had a positive divergence on the 10-minute chart right there. Maybe a downtrend line. Let me show you a 60-minute chart. That's really what I wanted to queue up here. There it is as well. A little divergence right there on the 60-minute chart. A little divergent low pop. Remember, what I'm looking for and thinking we might get, that was major, pretty significant support on gold. And if gold can recover that, that's about almost 1,700. That's going to be pretty bullish. It has the potential to trigger a bear trap or a short squeeze, because a lot of people probably piled in short in gold right there. So still liking gold, and silver as well. And gold's doing pretty decent today. Silver as well. Silver, remember the last update I gave you a few days ago, I used this 2-hour chart. Well, there was a 2-hour candle, 6 months. We were right at downtrend line resistance, and then we had 1994 price resistance just above it. So we had a pullback. It's unlikely to just blast on through a trend line like it's not even there after such an extended run. You break out of trend lines, but usually after some consolidation after tagging them. So we pulled back, and we're at it again. So if silver can pop it, now it's got to pop 19,943. That was a previous high. It's also was resistance before we even got there, and then that's how that would look. So and of course the miners should go up with it. If the markets bounce today, crypto will. We need to get a little more traction, I think, on the rally, and then I think the crypto buyers are going to step in. So there's a trade to be made. I grabbed some Ethereum futures today. Let me show you that real quick. ETH, that's the actual crypto. Here's what I'm trading. We're still on the September contracts. I think they go through the end of the month. Right here is a previous reaction low and positive divergence. So that's where I grabbed it at that reaction low this morning. We're not far from it now. It hasn't really done much because it's waiting. I don't think it's going to rip until the markets go. But if it can hold that support, and it's like anything. You buy something at support, you have a stop a little bit on the other side of it. If it drops, there's your next reaction low, 1342. But this, I'm going to keep stops tight. We're either going to rally today, and then I think, like I said, I really would love to get a nice short squeeze throughout the day, hit my targets, get out, and then get back short by the end of the day with, a mild, go into the weekend with a mild short position, nothing too crazy. Targets. My targets are kind of pretty much coincide with the market. Sometimes I'll trade something that's highly correlated to something else, like in this case crypto, and I'll just trade it off the indexes when NQ hits my targets, my bounce targets. If I think there's going to be a reversal, that's where I'll sell crypto, because crypto is trading almost in lockstep with the market. So, but two targets if you want to target itself at about 1474, a little higher, about 1476. And then 1525 or so. Those, if we can really get some traction on a rally, a little bit more, but way too early to say. Like I said, we have to see these indexes go green today, and we're still far from it. And the Nasdaq futures are still down 1.3%. All right, last one, because I know some of you probably prefer Bitcoin, BRR, Bitcoin futures, building some pretty big divergences. Yes, in a bear market, divergences often get burned through, but there's some decent support here as well. Right here, look at 1, 2, 3 reaction lows. We broke it, and we didn't just meander on down. We had an impulsive drop that helps validate that support. Then we backtested. Boom, we popped it, and we didn't just meander on through. We exploded higher. So this tells me this level, 319, is an important level for Bitcoin. It's been validated a lot lately. So therefore, trading 101. Oh, so I moved that line by mistake. We're a hair above that level. 19,300 is where it's at. But if all eyes see it and the market starts to reverse, don't hold out. If if you think the markets are going to reverse and you want to wait for 19,300, well, thing might hit 19,308 and you miss your fill. So I would have stepped in early. It's more of a support zone. And there's your divergences, and that could carry it up. I've got one little stop along the way, right about there, give or take, to 20,000, and then potentially up to about that 20,568. That would be my max bounce target at this point in time. All right, that's it. Treasury's already got those charts out to you. That's just a short-term thing if they bounce. And of course, I just showed you the 5-year. They all move together. The 10 years, I took, I like to usually I'll layer into all of them. ZN's a 10-year, ZB's a 30-year. I can give you the ETFs, but you have to put so dang much into the ETFs just to make money, because you only, when you're trading treasury bonds, you're not, especially for short-term bounce trades, you're only looking for % or two sometimes. And so what you do is you leverage up with the futures and make it worth your while. You can do that with ETFs. You just have to buy a whole lot of TLT, or IEF is the 10-year, TLT is the 30-year, and then IEI is the 5-year. So all right, I'm going to wrap it up here, and I'll give you my thoughts if anything changes. This has been Randy Finney with Right Side of the Chart. Have a great day.